The China trade is the most exciting investing opportunity I've seen in a few months. A few months ago, I was really concerned that I couldn't find any good stocks to buy in the US market because US stocks had gotten very expensive. At the same time, China stocks, I've always known, have great fundamentals. These are really good businesses located in a good region that has very high economic growth. And last week, the China government has really dedicated supporting these companies so that their economy will grow at 5% GDP growth, so that these publicly traded companies will see their stock prices go up to the point of really addressing stock prices through the borrowing of money to buy back shares of companies, which is incredible. A lot of other things the government is doing to help China based companies. At the same time, China stocks have been sold off for 3 years. There's a lot of upside potential just in the fact that these companies continue to operate for the last 3 years very well. They grew their revenues, they grew their profits, they grew their free cash flows. So now it's time to see how high these stocks are going to get. And I've been really putting a lot of my analysis into China based companies. And I wanted to share with you a list of stocks that I'm looking at very closely. Some of these I've already started buying into these shares. One of these, I already own the shares. And I'll share the list from worst to best. I'll share my least favorite to my most favorite over the course of this video. Now, keep in mind, I'm just an investor sharing my experience, my journey. I'm not recommending you buy, hold, or sell any of these stocks. Please weigh your decisions very carefully. Hey, I wanted to ask for your consideration in being a paid member of this community and channel. I'd really appreciate your financial support, which doesn't take a whole lot. There's 3 options for you. If you can consider it by visiting the link in the video description, I'd really appreciate it. Thank you. Coming in fifth place is Li Auto. This company is doing a great job becoming a new car company selling predominantly in China. It has a low market cap of just $29.5 billion and a reasonable PE, considering that the company is really growing fast. When you look at the quarterly growth, it is a little bit concerning that their growth is really slowing down, but the company is producing really good free cash flows, and those cash flows really value the company well. Analysts believe that the company is a buy and it is discounted by 21%. So that's really good for the company. Li Auto has an overall 28% discount based on the valuation I calculate using their free cash flows and their earnings per share. Their free cash flows are just great. The earnings per share doesn't quite give me a very good valuation, but I use mostly free cash flows as my basis. So overall, Li Auto is exciting. I think they're doing a lot of good things right, and I like the company. Li Auto is desirable, but doesn't have complete barriers of entry against competitors. Let's face it, if you're a car manufacturer, you have a lot of competitors. So I like that they're in China. They have a great market to sell to. So I put them partially in the green, but mostly in the gray. Coming in at fourth place is Alibaba, which is the biggest market cap Chinese-based stock there is out there. They have a market cap of $266 billion. They're a lot like Amazon operating in China. Their PE in 2025 is expected to be 12.4. That seems really attractive to me. It's a strong buy, but the stock has really worked for the past month. So the stock price has really gone up. So it's made it a little more expensive. They continue to grow their business and really look good. So it's a really nice stock. This is a stock that I own principally because I just think they're so strategically positioned to serve the Chinese and Asian markets. They're also selling into the United States, which is exciting. I believe Alibaba is discounted by 30% when I look at their free cash flow valuation as well as the earnings per share valuation. The free cash flows don't have as high of a discount that I like to see, but earnings per share just look fabulous. Combines for about a 30% discount, and I use a reasonable discount rate on Alibaba. Alibaba has great competitive advantages, and I put them clearly in the green. They have the size, the network effect. They have barriers geographically to keep outside competitors like Amazon out of their market space. So they are clearly in the green, a very desirable company to me. And it's great to put them in the fourth position of this review. Coming in third place is JD.com. JD.com is quite a bit smaller than Alibaba at $65 billion in market cap. And the company is going to have a 10 PE going into 2025. That just seems so low to me. It looks great. Analysts think it's a strong buy, and the stock's been really working for the past month, up 65%. It has been a good growing company. And as you can tell, the growth in these stocks looks great. So why were stock prices so beat up and lowered over the last 3 years? Incredible. This company produces great free cash flow, has a terrific balance sheet. JD offers a terrific discount of 76%. When I look at their free cash flows, they're just amazing. Their earnings per share is not quite where it needs to be, but the free cash flow is the basis of my valuation, and it really creates a discount available for me on this stock of 76%. JD joins Alibaba in the most desirable quadrant of my desirability index. And the reason for it is they're a pure play e-commerce company that is really mastering the supply chain business. So I really like what they're doing. I love their free cash flows and they have good competitive barriers. Keep in mind, China is going to be the biggest economy on earth. They're growing faster than the US, and JD has a great strategic position in a very high growth economy. Coming into second place is NetEase. This company resembles Netflix as well as a gaming company. It's a really exciting business. It's really growing quite well, and they produce great free cash flows, profits, and it's a really nice stock to look at. It was so good that I ended up buying shares today. Let me tell you more about it. Market cap of this company is $65 billion. Their forward PE is just 12. If I compare that to Netflix, we're not even in the same zip code. It's so different and more attractive. When I look at analyst reports, it's a strong buy. It's still discounted even though this stock has really worked for the past 30 days. The company has been growing quite well, and they produce great free cash flows and profitability. When I look at NetEase and value the company based on free cash flows and earnings per share, it has a very good balanced valuation and it provides a discount of 41%. Really nice discount with a discount rate of 11%. That looks really good to me, and I decided to be a stockholder today after I analyzed the company. I also put NetEase in that green quadrant because they have access to that China market to provide their streaming services, their games, their media. Very big market that continues to grow their middle class. So NetEase is a very desirable company to me. And I rank them as the second best stock that I've seen coming out of China. And coming in the number one spot is Baidu. This company is an exciting company that resembles Google to some extent, being a search engine in China, among other services it provides. It has a low market cap of $40 billion, dollars, and the forward P is just 10. These numbers are just hard to believe, but they're reality. It's a strong buy according to analysts. It's still discounted, even though the stock has really been working. Over the last 30 days, it's up almost 35%. The growth in this company looks excellent, and it has great free cash flow and a solid balance sheet. Baidu offers me a discount on the stock of 63%, and it's an exciting business that I really like to own. I already own Google in the United States. It'd be great to own Baidu in China. In fact, I bought shares in Baidu today, and that 63% discount was quite compelling. Really good earnings per share, really good free cash flow out of this company. Baidu is clearly in the green quadrant of a very desirable company for me. I think they have access to a market that is growing, that continues to have more purchasing power. There's just a lot of desirable aspects to the company. Along with, they have that competitive advantage being able to operate inside of China, where Google and Meta and other companies are quite regulated by the Chinese government. So, with that, this makes up the most desirable companies that I've come across coming out of China. My top five. I hope you found the video interesting. It's a great time to be looking at Chinese stocks. I'm really excited about it because we were hitting a wall when it came to US stocks. I've done great over the last 2 years with my US stocks. I love them, but it was getting harder and harder to find value in the US stock market. And I've clearly found it in China. Thank you for watching.